Hello, everybody. Welcome. We're going to give a few minutes for a few more people to join.
Recording in progress.
Okay, you mute yours. Okay, so I think we're going to get started just because it's already a little bit past 12:03. So thank you everyone for getting on the Zoom call today. My name is Jennifer Pacheco and I am here with Real Consultants. I am a mortgage loan originator and I wanted to present to you a really great speaker. His name is Frank Burruel. And he is super knowledgeable about the CalHFA down payment assistance programs. So I'm going to give the floor to Frank.
Thanks, Jennifer. I would just say I've worked with Real Consultants for some time, over 5 years. And, they're a direct lender and they have some really great programs there, and their commitment to helping the agents grow their business is huge. So, make sure you reach out to Jennifer and partner with her and get yourself going, because they are really experts at this stuff. And they're even, with some of the other down payment assistance programs out there, they're good with those as well. So with that, I'm going to jump into CalHFA. And you don't have to reply, but who has closed a CalHFA loan in the past, if any of the agents have done that?
I do want to interject. If you guys, this is an interactive Zoom. So if you have any questions, please feel free to unmute yourself. You can definitely ask or put it in the chat box and I'll keep an eye out for it.
Well, I think there's a stigmatism with like CalHFA and down payment assistance. Some programs are difficult and will take some time. The one thing and why CalHFA is so popular, there's like 800 to 1100 that close every month, is because of their efficiency. And so if you have to sell and you want some comfort to know that, hey, I don't have to worry about meeting a close of escrow, this is the product for you. It's efficient, the pricing's good, and we close the majority of these loans in the state on the wholesale side. So we are, the #1 lender with these. We had 5 sales reps that did over 20 million each of Dream for All in the first phase. So you're in good hands with us, and we're experienced with this. So I want you to just put that at ease, because in the past, there's been like, okay, this is going to take me a long time. And being an agent, that's important for you, because you want to be well represented, and you want to know everything gets done timely. And even more importantly, you want to be paid. So with this kind of stuff, it is very efficient. I've had people try to close them, in 2 weeks, but I usually think, your 30-day escrows are good to quote with these types of loans. But definitely on a regular basis, I close them in 21 days. It's not a big deal. The basics of these, I'm going to go over the Dream for All, which is why everybody's here. But I want you to realize that, the numbers don't show that everybody's going to get the Dream for All, and so you do need to know some other things about down payment assistance programs, like the CalHFA My Home. Like I said, there's about 800 to 1100 that come through every month. And I don't need you guys to understand all the way the loans work, but you know the basics probably, that an FHA is 3.5 down and a conventional loan requires 3% down. Well, on a down payment assistance loan like CalHFA's, that down payment, the 3 or 3.5, is just coming from the state. And that is, allowing your borrower to have a limited amount of funds and get into a home, which is great. And the other thing is that you'll see this stuff all over social media, TikTok, Instagram, Facebook, it's all over. And you don't want to be the agent or the loan originator who doesn't have enough to just get by. And I want you to have enough after this call to get by, to have some basics so that you can educate your borrower, because there's too many people that sell out of and they lose a buyer, right? The buyer goes and uses the young millennial loan officer that is all educated on this stuff. So I want you to be an open mind and just get some basics, maybe take a couple notes, and then turn it over to Jennifer. She'll dial you in. So with that, just think about it being an FHA with 3 or 3.5% down. from the state or the conventional at 3% down. And there's some overlays with this stuff. That first program is called the My Home. And before I get into the Dream for All, I'm going to go over the basics because the My Home never stops. They're getting done in Orange County, LA County, Riverside, San Bernardino County. I know you guys are in Cerritos. They're getting done all over the place. And I'm going to go over the income limits in a sec. But basically, what you're looking at is you can even do high balance loans on these. So there is no sales price limits for this program. And it is required for first-time home buyers. So these are going to be for buyers who haven't had a home in the last 3 years. And we'll talk about the difference between that and what the Dream for All requires in just a sec. But these loan programs go down to a 640 FICO score, whereas the Dream goes down to 680. So you have a little bit more flexibility on this. The Dream just does conventional. This one allows for FHA as well, which allows you to get into the lower scores down to 640. The DTI, the debt to income, and you don't need to memorize this or know about it. If you just want to turn over to Jennifer, it's okay. But the minimum DTI is, the maximum DTI is 45 for FICOs under 700. It's 50 for FICOs over 700. Income on these, you're going to follow regular Fannie Mae and FHA guidelines. So leave it at that. There's not too many complicated things other than they really want to help the first-time home buyer get in the home. They don't really allow non-occupant co-borrowers or non-borrowing spouses. Can't be on the, if you're going to be on the loan, you're going to be on the loan. You can't be on title only with these loans. Any questions after that first slide? Jen, anything? We're cool?
No, we're good.
Cool. So the regular program that you're going to see that is great. This is My Home. I mean, the rates on this are awesome. You're talking like the FHA version of this today was like at, you know, somewhere around 6 3/8, I think. Here, let me pull it up real quick. The FHA was 6.625 and the conventional was 6.875 today. So you'll see that move along with the market. So those rates are pretty great to get money from the state and get into home with very little income. So the way these work is there's a first loan that's a CalHFA FHA loan or a CalHFA conventional loan. The second loan, which is called the My Home, is your down payment assistance from the state. And that can be either 3 or 3.5% from the state. And these loans do offer the ability to offer a third mortgage as well, which is called the ZIP, and that's for closing costs. Don't get too many of those because the rates are much better when you just get the down payment assistance. The seconds and thirds, they're both silent seconds, so the borrowers aren't making payments on those. The other great thing about this program versus other DPAs like the LAHD or something like that, this My Home is 1% simple interest on that second. The third is a ZIP, that's 0 interest percentage, no interest accrued. So the borrowers like that. You know, if you took a $500,000 condo and they got $15,000 from the state, that simple interest, if they sold in 2 years on that $15,000, it's only like you know, $300. So they're paying back the second plus the $300. So not too expensive. Some programs are at 3% for the DPA. Some of them are equity share, which we're going to go over on the Dream for All. So very minimal money back with these loan programs, and you're getting people into home. These are not forgivable, so they will sit on title until they sell the property. The borrower can also add some of their own funds if they want. So let's talk about a little bit about the sales price range on these. I know, you know, we've got Orange County and LA County bordering you guys. So the income limits for LA County is at 194. For Orange County, it's 253. So with that sales price range, what are you thinking, Jen, on sales price range for these?
Orange County maybe like 850, you know, depending on obviously debt. If they have a Lamborghini on there, then I don't know.
Yeah, that's good. You know, that's good math with that. And then LA maybe come down a little bit more because the income's at 194. So, you know, turn it over to Jen and she'll see where you qualify or if there's other programs that are available. It's good to kind of know the math. You know, everybody wants to get their commission, right? So there used to be a term that was used in the 90s and early 2000s was no money down programs. I don't like that term because if you use the term no money down, the Dream for All, it's easy to have people with very little money you're going to get no money buyers that come out of the woodwork. And it's not that there's anything wrong with them, but you need to, you want to qualify and ask good questions. I think the number is 10,000 to 20,000. If they have that, usually it's easy to make the transaction smooth without anybody cutting commissions, because you don't want to go through this process and then you get to closing and you realize, oh, the buyer had some large deposits or couldn't trail their gift funds or whatever. And then, your agent or your loan officer cutting commissions. So you don't want that, right? So I think that number 10 to 20 grand are the good numbers, starter numbers to work with, depending on, the other thing that I was going to mention is the importance of seller credits and working that angle. I don't know, Jennifer, do you want to add anything to that or?
Yeah, so it with these programs, it's definitely important to have some cushion for your borrowers and, helping them with some seller concessions, working your contracts like that. So just keep that in mind with these programs.
Yeah, and you'll notice a lot with these down payment assistance programs. You'll see that, every time I do these in front of real estate agents, I get one agent that says in the meeting, oh my God, this is going to be great for my daughter. I'm going to get her into this program and it's going to be awesome, blah, blah, blah. And that's cool because think about it, the agent knows the buyer, right? And the agent's going to really work hard to get on the other side to get some seller credits, maybe even knows the agents on the other side. All that stuff is okay with down payment assistance as long as you meet non-arm's length guidelines, which is pretty simple for Fannie Mae and FHA. So don't be fearful of that. That's okay. Just get with Jennifer and fully disclose what you're doing so we can tackle all the things and make sure it's fine. Because the little bit of collusion and the little bit of non-arm's length is okay. We will see a lot of where, the agents know the other agents or the buyers know the agents, and there's relationships. And that makes it easier, right? Because your goal is to try to keep as limited amount of the money out of the buyer's pocket. So that's okay with the My Home. Any questions before I jump into the Dream for All? We're okay?
Yep, we're good. No questions
cool.
yet.
So new news came out on the Dream for All this week, which is really good news. Like I said, we had 5 salespeople that did over 20 million on the first phase. I did over 20 million. So it was tough because it was first come, first serve, right? Because whoever was ahead of the track on this program was the ones that had their guys in contract and got their deals done. This time it's different. It's going to be available to anyone who wants to get into it. And there's about 11 or 12 hours worth of videos on YouTube of this stuff. And if you want to listen to it, you can. But the cool thing about the videos, and I listened to them while I was walking, so I'm pretty knowledgeable about this stuff, and we've had meetings, obviously, with CalHFA, and you will notice that they're focusing on some certain groups. And one of the groups that didn't do well in phase 1 was the Los Angeles County and Orange County and San Diego County. So that's great for you because there's algorithms to this program. And, they even mentioned on one of the calls that they were looking to get 500 units out of this in LA County alone, which is great because if they tell you there's going to be 2,000 units total, 500 are going to go to LA County. That's great because that's a quarter of the loans coming there. So the odds for you are going to be better. So some of the other algorithms they're looking at is that were underserved in the first phase was some of the minority groups, the African American community and the Latino community did very poor on the first phase. So the CalHFA was aware of that. They did some extra marketing to those groups to make sure they were helping some of the underserved. So I imagine some of the algorithms will look at those features to it. So before I jump into the Dream for All, I want you to understand the definition. And this is going to be big because if they don't fit into the first generation home buyer definition, it's easy. You just talk to Jennifer about going CalHFA My Home, right? And you still can get funds from the state and still get your deal done with down payment assistance. The Dream for All is a little bit unique. Again, they're trying to help the underserved and first generation buyers. So I'm going to read the definition, and if anybody has questions, and I'm going to give you an example as well, you can shoot them at me. Each borrower must be a first-time home buyer. At least one borrower must be a first-generation home buyer and a California resident. So what does that mean? So first generation home buyer definition, it's defined as a home buyer who has not been on title, held any ownership interest, or has been named on a mortgage to a home in the US in the last 7 years. Additionally, to the best of the buyer's knowledge, their parents do not have any present ownership interest in a home in the US, or if they're deceased, when they passed, they didn't have ownership at the time of their death in the US. So if you were to ask questions on this stuff, it's very specific. You know, they've answered everything in the definition. So you'll follow the definition to a T. And these questions are going to come up in the portal, and I'll talk about the portal in a sec. So let me give you an example. Let's say you got a newly married couple. They've been married 3 years. And let's say one of the couples, the wife, her parents have never owned a home, and she's a first generation home buyer, easy. The husband, though, was at a previous marriage, did own a home, and he is a first-time home buyer. He sold that home and got out of his marriage 4 years ago. He's a first-time home buyer. That scenario is okay. You have one first generation, you have one first-time home buyer. That's going to meet the definition of dream for all, and you can move forward with that. So what questions or any scenarios that you have on first-time, first-generation home buyers? Any, Jennifer, that are in the chat there? Or anybody want to speak up?
So I have a question for you, Frank. So how about like, I don't know, someone that was like, I don't know, like really has no idea, no of any past ownership, but it does come up. Are they going to take measures to like really dig deep into that?
Yeah, so we're going to go over that portal in a sec. It's a really good question. So and that stuff came out this week. And so I'm going to take some time on that. It's not on the PowerPoint, but I want you to write some things down about that. So I'll cover that. Good question, Jennifer. So I'm going to go over the basics to the difference between the My Home real quick, and then I'll address that question for the portal, because everybody's kind of looking for the angles. Hey, is my guy, it's going to be worth me to get my time spent on this, right? So there is some restrictions, right? It's the FICO scores on this one go down to 680, whereas the other one will go down to 640, right? It does go for lower income. So if you have buyers that are buying in the high desert or something like that, and they have lower income, you can get down to 660 FICO score. The state is going to give you lesser than they did last time. So they're only giving 150K or 20% of the sales price, which is ever less this time. They're also not allowing, the 1.3 purchases where the borrower's bringing in 300 of their own money. They're getting 200 or 300 from the state. They stopped that. So they're not doing that this time around. They put a cap in there, a minimum CLTV at 95 and a maximum CLTV at 105, and the maximum borrower contributions at 5%. So what I'm going to do is give you a definition of that. The 3 simple scenarios you would probably see from buyers that are going to use this Dream for All. The first scenario is the obvious one. They're going to get 20% from the state, right? And they're going to go at an 80% new loan, right? And then they're going to bring in their closing costs and their compensation to the originator. That's all they have to bring in. Now they can tweak that. The second option, they can make it maybe 83% LTV, take the 20% from the state and raise that all the way to 103% CLTV and use those 3% funds to pay closing costs and the originator. Or they could even take 5% of their own funds, because maybe they're really trying to stretch the sales price. With their income and their math, they're putting 5% their own funds. So they're doing a 75% LTV, 95% CLTV, and then bringing 5% of their own funds. Those are the 3 scenarios you'll kind of see on this, but it's cool because the no money borrowers on this one actually do work, because they're going to have to come up with some money for the EMD, but they could get it back after close, because if they did an 85% LTV, 105 CLTV, they could have some money to pay that stuff, the closing costs and everything, and come in with very little money and even get their EMD back. So with that, I'm going to ask any questions about the program basics before I go into the portal and the timing and stuff.
No, you are going to cover that this one, this particular one is not the first come, first serve like it was last time, right?
Yeah, exactly. And that's perfect segue. So we'll jump into that. So if we look at the last bullet point on the PowerPoint, you'll see it is not a first come, first serve. So the portal is going to be opened April 3rd. Okay, so that's been established by CalHFA. They sent that out this week. It's going to close the 29th. So they got a month there to go into the portal. So there are it's not too complicated either. It's not you, the agent, going in the portal. It's not Jennifer going into the portal. It's actually the borrower that's going to go into the portal. And the reason why they're doing that is because they are going to do some third-party verification to validate that the buyer is a first-generation home buyer. So they have a firm that's going to do that. They anticipate anywhere from 20 to 50,000 applicants for only 1,700 to 2,000 vouchers. So the numbers are tight there, but I told you a little bit about algorithms. So the things that the borrower is going to need for the portal come April 3rd, and you'll need to get with Jennifer on this stuff so that the buyer and Jennifer are on the same page, and so they'll be green light and ready to get in there April 3rd. And it's not going to matter if they get in April 3rd or April 15th, but it's important that they have all this stuff so it's smooth, because me, from a salesperson, I get a little nervous when I have a buyer who's not as knowledgeable with a lot of the terms getting into a portal. So I'm sure you're going to get questions. The agents may get questions. Jennifer may get questions. So just turn them over to Jennifer and then turn them over to me, and we'll get them through. But there is some items that they're going to need. So I'm going to read those out to you. The first thing that they're going to need is a pre-approval form letter that from CalHFA that Jennifer will sign for them. And it'll have Sierra Pacific at the top as the approved bank for it. And then it'll have Jennifer as the approved loan originator on it. So the borrower will need that in PDF format. They're also going to need some sort of government ID, passport, driver's license, visa, EAD card, permanent residence card, something to that nature. If it's out of the box, get with Jennifer and she can bring it to me if it's something we're concerned about. Third, the borrower will need proof of their current address, like a utility bill, a cell phone bill, some government form of ID with their address. Also, they're going to need, if they were in foster care, then you would need proof that they were in foster care if they didn't have any parents and stuff like that. So you could omit the first generation guideline there. The other thing for the first generation, what they're going to have to do in that portal is they're going to have to put the names and dates of birth and their parents' current address. So they'll need that when they go into the portal. There'll be, like I said, there'll be third-party verification of that info. And so they'll need to prepare to answer those questions. The borrower will also need to take, this is new, will need to take the shared appreciation class before they get into the portal. And it's kind of good because then they get to see how the appreciation part works. And I'm going to go over that with you in just a sec. And lastly, just make sure your borrower keeps track of their emails from CalHFA, because CalHFA may come back to them and ask them a question. And so they want to just be ready to, address whatever CalHFA has from them. The income limits are a little lower on this. So you're going to see for LA County and Orange County, Orange 202, LA's 155. So you're going to probably see anywhere from 650 to 750 range on the price. So maybe some condos. So get with Jennifer to make sure that the condo is meeting agency guides and stuff. I'm gonna stop for a sec. Yeah, sorry. If I get rolling, sometimes you got to stop.
Yes. So somebody's asking, do they need to complete education classes before registering or getting the voucher?
Yeah, that just came out this week. So they do not need to take their first time home buyer course. They need to take the appreciation course, which is an hour. So Jennifer will send you that link and they can get on that now. And again, it's not first come serve. So they have the whole month of April to get into that portal and register. Good question. Anything else in there, Jennifer?
And somebody asked, what's CLTV, the combined?
Oh yeah, that means combined loan to value. So I gave you those 3 scenarios. Mostly you'll see the borrower getting 20% from the state. They'll go at an 80% loan to value on the first mortgage. They have a silent second. That takes them to 100% CLTV. That's combined loan to value with that second from the state.
That's the combined first and second, right?
You got it. You got it. Good question. Any other ones in there, Jennifer?
That's all for now.
Cool. There's no sales price max, but those other restrictions kind of cap you out. So I kind of told you about that. I do want you to understand the shared appreciation terms before I let you go here. Because it's going to come up. Your buyers are going to ask, especially after they take that course, they're going to ask you some questions. So make it as simple as you can. Jennifer will email you some of this PowerPoint if you need it, and you can just share this screen with them. So the first program I told you about, the My Home, which is great, it's 1% simple interest, or if you get the third, it's no interest accrued on it. The shared appreciation loan for the Dream for All, which is 20%, you pay back an appreciation share when you sell. So I'm going to give you an example. If your income's in these income limits, then it's 20% back share appreciation you have to give back to the state. If it's in the low home ready income limits, which is in Orange and LA counties like 84, then you get, it'll be your smaller condos. If they fit into that, then it's only 15% share they have to give back. So I'm going to give you this little slide here, and you guys can use this when you're explaining it to a borrower. So make it as simple as possible for them. They're going to have this on their class, but don't make it too complicated so they can understand. So if they buy a $500,000 house, they get a first mortgage, what I was talking about, at 80% at $400,000. They get a Dream for All loan for the second of $100,000. And let's say 5 years later, they're going to sell it for $640,000. What's going to happen is the state gets some of that appreciation share, because we know that there's a appreciation share with the math at 140, just basic math, because we know they probably paid down some of their first mortgage. But to make it easy for your borrower to understand, there's an appreciation share from the state. All they look at is how they're going to collect their money. And that's going to go off what they bought it for to what they sell, or if they refied, what they refinance at. So in this scenario, 5 years later, there's 140,000 in appreciation. The state's going to take their 20% from that, which is $28,000. The borrower gets to keep the rest. Easy math. Keep it simple like that. Don't make it too complicated for them so they get too confused. Any questions about the appreciation share?
No, none.
Good. So I recommend, they're going to have paperwork when they take the class that's going to go over this with them, and they'll need to click and move forward. But I wouldn't be surprised if you get the question and you have to kind of break down it for them. So use the slide to help you break it down so they get their ding, 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 and they understand. Processing with these. Yeah, go ahead.
Sorry, Frank. Somebody's asking, first time rate and term refi won't cause a repay?
No, so yeah, I didn't get a chance to talk about that. So this program does allow a one-time rate and term refinance. So they can subordinate that Dream for All loan. And because we know from the mortgage backed MBA forecast that the rates are going to probably come down over the next couple of years. So, Jennifer will be able to help with the refinance and subordinate that second, and get them a better rate on their first and payment. So yeah, that's an okay thing. Any other questions, Jennifer?
No.
Okay, cool.
Questions, by the way.
Yeah, and don't worry about the processing piece. Because it's not a first come, first serve, and because they're going to get their voucher. So I gave you those numbers. Let's say it's 40 or 50,000 register, and they give out those 2,000 vouchers. Let's say your buyer is one that gets the voucher, right? So they're going to have 90 days. So they're going to probably be giving out these vouchers early May, right? So they get the voucher. Let's say your borrower is one of them. From there, they have 90 days once they get the voucher to go get into contract and then reserve funds with the state. So what Jen's going to do when they pick a property, let's say it's day 85, so it's end of July, and they pick a property, Jen's got to get that with their voucher. She's got to get that loan reserved and locked with the state by that day 90. Then she has 30 days to close. She can do 2 extensions. So these loans could close all the way into September. New construction could even go into October. So these things could last for a while. And the cool thing about that is you don't have to stress about whether mine's going to close timely, the stress that you had in the first time around. So if it's much more efficient, again, we should be able to close these fairly quickly. The locking part is Jen's thing that she'll have to do with the state, and she'll do that once your buyer's picked a property. Any questions so far?
How quickly do you see these funds running out, Frank?
Well, so if if I told you there's 2,000 vouchers, right? And there's going to be anywhere from 30 to 50,000 that go into the portal, they're going to have no problem. They're going to go through and cross-verify those buyers, kick out the ones that are not first gens, and they're going to, then pull everything into the algorithms and then spit out some numbers that get get the lottery tickets, right? So those ones that get the vouchers then will go into contract, or will have your undivided attention to go get a property in 90 days, right? So you and Jennifer work together to make sure that they're, because you're going to start this stuff now, right? Some of this stuff might not happen to July. So you may have to run renew credit, maybe get new pay stubs, rework on their math. So the cool thing about down payment assistance programs is it gives you the opportunity to do a lot of counseling and use that to your advantage, because this is going to give you referrals. So the cool thing about DPAs, it's not like you have to close a lot of these dream for alls. The important thing is opening doors to buyers to get off the fence. Because what happened last time, man, we were slammed with loans after these. Other CalHFA loans came in. All these buyers said, well, I'll just take a regular FHA loan. I want to buy now. I've gotten all my juices going. That's the great thing about this program. Sell it. Don't be afraid to sell it. Don't be afraid to do meetings with buyers, because if you're not, you're missing out. That's the opportunity of this Dream for All, is a hook to get your buyer off the fence and go and look at buying homes. That's where the value is. The other thing I just wanted to go over real quick is we do a lot of loans. We're the top lender at doing programs for first-time home buyers nationally. We do a lot of Home Possible and Home Ready loans. We do the LAHD, LIPA, and MIPA. That could be another call Jennifer can set up with you on that program. But I think one thing you need to think of is the first-time home buyers in your community in Cerritos and stuff. They recently get married and you graduate from Chapman or UC Irvine and they're looking to get their first home. It's hard for them to buy in Cerritos, right? So you need to be a master as an agent. You need to know what's going on with the condos, because affordability is a problem in Cerritos. So you need to know which condos are FHA approved. You need to know the ins and outs of the insurance and situations with the problems that everybody's running into California. These are all good questions that you need to partner with Jennifer, because she can help you get to the finish line and not get into escrow on something that's not going to close. And then we even have a condo division that will help out if you have a condo that they're looking at buying and you're like unsure, and the agent on the other side you're not sure or confident with. Get with Jennifer. She'll get the info over to me, the info you can get, and then we'll see if that condo works. We do a lot of FHA single unit approvals because not all condo projects are approved FHA. So we will do those for you as well. So I gave you a lot of info. Jennifer, you can chime in.
Yes, and don't be afraid of these loans. It's a great conversation starter with your buyers. Maybe they don't qualify for this, but it's just a conversation starter to get them excited and get them ready to purchase. You always want to have these little golden nuggets just to keep your buyers, excited about the market. But with that being said, I will send everyone a copy of this Zoom meeting today, because we did record it, right, Sandra? And thank you so much for your time. If there isn't any other questions, I think we'll wrap it up here.
I'm going to say one other thing. I think, we're all salespeople here, agents, real estate agents, what have you. None of this stuff works until you guys make a sale. None of it. So you have to go and ask for the business. This program opens doors. It opens doors and gives opportunities. I know a lot of people don't like to get in groups. The first time I did this PowerPoint presentation to people, I was nervous and I screwed up probably a lot. My advice to you is to get out in front of groups and talk about this. If you need my help or if you need Jennifer's help, she's here for you. She will go and do these trainings with you for the first-time home buyers. And if you need me to come too, that's where you open the doors. You're opening and expanding things with these stuff. If I'm giving you advice, fail. Go out and fail. Sell, suck the first time you sell it, but fail and get better and do better the second time. Get in the routine, because it's tough. A lot of the real estate agents out there are my age, 50s, 60s, 70s. The new millennial agents out there, they're cutting their teeth on blasting out all this stuff in TikTok and Instagram and everything. Get with Jennifer. She can help you with that stuff and get your marketing stuff going, and fail. If you're not failing, you're not doing your job. So fail and get better.
And people are gonna ask you about this program because like he said, it's all over social media and that's where everyone's at right now. So it's good to know the basics. So again, you can have those conversations.
Good job, you guys.
Thank you so
Thank you.
much, Frank.
Thanks. Holler if you need me.
I will. Thank you so much. Bye, everyone. Have a great rest of your day.
Bye.